because you don't have to have a perfect credit score. We could get deep on this one when it comes to credit, especially with my background and with helping folks with credit in the past. But of all of the credit reports that I've seen, over the years, I've never seen a perfect credit score because no one's perfect, right? We've seen some pretty close, but when it comes to credit, I think there's a couple things that are important. Credit does help you with getting into better loan programs. Yes. Credit.
Hey everyone, it's your friend Ryan Rolfe with the dsmSOLD team at Keller Williams Legacy Group, and I'm super excited to be here for another episode of Your Real Estate Experience Matters, the dsmSOLD team podcast. Our podcast talks about stories of our previous clients and partners, which they're willing to share with the public. And these stories talk about different journeys our clients have through the home buying, home selling experience, and also give tips, tricks, hints, and all sorts of resources from our amazing vendor partners. So I'm super excited to chat today about myth busting on home mortgages, applying for loans, and everything mortgage with Blake Overton of VIP Mortgage. Be sure to listen all the way through for the fun details. And now, without further ado, I would like to introduce Blake Overton, our guest for today. All right, Blake. So it's been a little bit. You've made a brokerage move here to this amazing new mortgage company. And yeah, how are you? How's it been going?
Good. It's of course been a little bit of some organized chaos, but everything's been going well so far. Getting all comfortable with the new systems, which has been great. Awesome technology compared to what I was used to. So just kind of getting settled in with all that.
Awesome. Well, tech is where it's at. That's for sure. I don't know how I would manage my day today without the amazing technology and tools that we have. So I'm super excited to chat with you and learn a little bit more about VIP Mortgage through the questions that we'll be asking. And of course, all of these are general mortgage related questions. So feel free to throw in any tidbits or information about VIP. You've always been great to work with, so I'm really excited to have you here. So I will jump in to our questions for today. We're going to bust the myths. Are you ready?
Ready
to bust real estate myths. All right.
Let's do some busting.
Low mortgage rates mean you need to buy a home ASAP.
Low mortgage rates mean you have to buy a home ASAP. That's the myth, right?
That's the myth.
Yeah. Okay. So that's saying the rates are low, hurry up and go buy, right? Is that kind of what we're saying here? Okay. I guess I wouldn't say it's a myth. I think it's important, and it's if you can buy when rates are historically low, that's a great thing. Rates are going to go up and down regardless. Most people tend to refinance at some point within the life of their loan at least once. So I don't think it's something where you just say, hey, the rates are going up. Now's not a good time to buy because there could be some opportunities for refinance down the road. And then a lot of times just being a homeowner is more of a quality of life thing too, right? So you could look at rates being in the 3.5 range, and that's great, right? Historically great. But you hit rates in 6.5, where we start seeing them higher than they've ever been before. Your payment might be a little off. Rents are going to go up anyways, right? Along with that. So the quality of life as a homeowner, I think a lot of people would agree, is worth, paying a little bit more, even in a rate increasing environment, if that makes sense.
Right. Well, that is a great answer for a great question. And as you mentioned, I'm glad that you mentioned, since rates have gone up, one of the things that we're advising our clients on is, hey, if you love this house, get into the house at a payment that's comfortable for you. And guess what? More than likely, interest rates are going to change at some point, and you can refinance. So you don't have to move; you just refinance, right?
Right. And I saw the statistic the other day. I don't remember what it was, but it was a high percentage of how many people stay within that that loan that they originally started with. So hence they refinanced within a short period of time typically. So yeah, I guess it just follows whatever the market does. And as long as you are keeping contact with either your loan officer once a year on an annual review, or if you're just kind of keeping up with what the news says, but you got to be careful with some of that stuff too. So, but yeah, it's not, I wouldn't say that you should only buy during low rate season, if you will. Myth busted.
Right. Well, the rates are still historically low if you look back to the 80s. Right? I mean, the average was 8-9% or whatever it is. So yeah, they're going up, but when it goes up, must come down. So so that is a good myth to bust. Next myth is you need to have a perfect credit score to qualify for a loan.
Well, that one I would say would be a pretty easy myth to bust, because you don't have to have a perfect credit score. We could get deep on this one when it comes to credit, especially with my background and with helping folks with credit in the past. But of all of the credit reports that I've seen, over the years, I've never seen a perfect credit score because no one's perfect, right? We've seen some pretty close, but when it comes to credit, I think there's a couple things that are important. Credit does help you with getting into better loan programs. Yes. Credit does help you with getting sometimes better interest rates. Credit does make it a little bit easier when it may come to meeting certain guidelines where it may not be as stringent, if that makes sense. So having a higher credit score, yes, it's important. Yes, it will definitely help throughout the process and getting approved and the rate and all that. But it doesn't have to be perfect. So depending on how deep you want to get on credit scores here, just to generalize it, I can say just from the experience of people that I have worked with, we've helped a few people under the 600 mark, but they had to have typically a higher down payment or reserves in their bank accounts. So those types of loans they're just not readily available out there, if that makes sense. So once you get what I usually will tell people over the phone, if we're just doing a discovery call, is especially if I can tell they're concerned about credit, once we get to 600, things get not easier per se, but if you can demonstrate that you have a minimum of 3.5% down, we're looking a little bit better with a lower credit score. If you get to 640, in a lot of cases, that will kind of open the doors a little bit to some down payment assistance programs that are out there. So again, an example of the higher the credit, the more opportunities you might have, but it doesn't take away opportunities per se, because there still may be some options out there in that lower credit score range. Now, typically, when we look at loans from a big perspective, we break them down between government loans and conventional loans, right? So that's just, if we look at it from a big perspective, you will see the government insured loans, we call them govies, kind of on the inside here, but on the govie loans, a lot of times you can get away with a lower credit score than say like a conventional loan, where a conventional loan, typically you're looking at those around, and this is my experience, not to say you can't get approved under that, but where they usually will start to make sense financially for the borrower is once you get to that 720, 740 mark. Again, but if you go out there and you're looking on the Googles, like what's the lowest credit score I can have for a conventional home loan, you're not going to see that answer as a 720, 740 like I just said. You might see that you could qualify down to 640, 620. So I don't even off the top of my head honestly know what it is, because you just don't see conventional loans typically on the with secondary market loans. Now, again, I'm speaking from experience on the secondary market, not necessarily like portfolio loans, which is a whole other topic that I think we could go over, not today, but that'd be on the secondary market, if that makes sense. Fannie, Freddie, lending.
Awesome. So you don't need a perfect credit score.
Don't need a perfect credit score.
A lot of options, it sounds like. So that's great information. So that one's busted. Next one is pre-approval hurts my credit score.
Okay. Another credit score. Totally cool. Okay, so I like this one. I like this because these are great myths or questions that come up during the home buying process with a lot of times with first time home buyers or people that are maybe just putting their feelers out there like, hey, I want to buy, but it's probably not going to be tomorrow, this month, or next, but it's going to be maybe in 6 months or a year. So pre-approval hurts my credit score is the myth, right? You hear that? Let me ask you, Ryan. So you probably have people say, well, I don't want to talk to a lender right now because I don't want my credit score to lower, right? Like you hear that?
Yeah, I get that one every now and again.
So in theory, I mean, yes, it could lower your credit score. Inquiries are a small portion of your credit score. However, the credit score has evolved over time, and this goes back to, I think it was a CFPB changed some things years ago that a consumer could not essentially be held hostage to that mortgage lender, okay? And so basically what that means is lenders would say, hey, don't go check out other lenders because that's going to hurt your credit score. So what that would do is scare the consumer into, not scare them, but hold them kind of captive in a way to working with that lender. So over the years, as the credit score has evolved, it changes in some good and some bad, but as it's evolved in this topic, it's helped consumers. So yes, you will see an inquiry on your credit report if you are doing a full pre-approval, which is a credit check. We could talk more about a pre-qualification later, but yes, if you're pulling your credit on a pre-approval, it would be an inquiry. However, the involvement over time with this is that the credit score now is supposed to be smart enough, if you will, to recognize that a person is reasonably shopping for a mortgage in a reasonable amount of time. So you can essentially shop to other borrowers because why should you be penalized so much if you're pulling your credit at one place and the same day you go check another lender out to get hit multiple times? And this is really similar to the car industry too, right? So in the car industry, when you go shop for a car, a lot of times you go to the finance department, right? And if you check your credit score and you did an application, or you check your credit report and you did an application at that dealership, you might see like a list of lender hits on your credit, right? And a lot of people will freak out thinking, well, now I've got 20 credit hits on my credit report in one day. The credit score is supposed to take that into consideration. Now, do we have any proof of that? I don't know if you can really find that, but if you go out there and you read about it and you see some of those updates that go on, that's what that's supposed to do. So it doesn't tank your credit. So let's put it at that. So I don't know if we can say this myth is busted per se.
One of those that's plausible.
Yeah, because it's. But I wouldn't put that, if I was looking to buy a house, whether you think you have poor credit or good credit, if you want someone to be able to guide you in the right direction, like you've got to go through that process. Like you've got to get your credit, whether it's good or bad. Here's what I see is I see a lot of people that have, say, lower credit scores or mediocre credit scores, and like they'll really fixate on that credit hit, right? Mm-hmm. So they'll be really concerned about that one credit hit where we're looking at overutilized credit cards, late payments, other things that are really more important than that one credit hit. So usually it's not the inquiries that are going to tank your credit score. But I would say when you are getting in the process of looking to buy a house, if you have a couple lenders in mind that you want to talk to, do it relatively at the same time, or within a reasonable amount of time. We don't have that definition of what reasonable is, but the credit scores apparently do. So
right,
just be reasonable. So
wouldn't it be nice if we had those answers?
It would be nice. It'd be really nice. I would love it.
Well, that one is plausible. So the next one is the approval process is a hassle.
The approval process is a hassle. It shouldn't be. So I would say myth busted. So hassle. Hold on. Hassle. The definition of hassle would be that's a huge pain in the butt, right? I wouldn't say it's a hassle. I would say that it is a hassle for people that are not organized or quite understanding, which is totally cool because a lot of people don't understand what we all look at as lenders. But I would say that some people probably would say that it's a hassle that maybe wasn't quite prepared leading up to that application step, to the pre-approval step. Then you could see where someone would say it's a hassle. Like, for example, I got a really good example for this. During the mortgage or application process, when we're talking about pre-approvals, it's really important that us as lenders up front get the full, in most cases, 2-year work history. And if somebody switches jobs, like that's okay to do that in a lot of cases, but it's considered, right? So if we look at that history and let's say you've switched jobs 2 or 3 times, that in itself doesn't disqualify you from getting a mortgage. However, it's really important to have that organization. So what I'll see sometimes is somebody will complete an application, like a pre-approval application, and when they fill that out, they skip a job. And we're on the other side trying to figure that out, not because we want to figure out a way to deny that loan, because that is not the case at all. We want to get to the finish line, right? That's the goal. Right. But if we leave that out, then we go back and forth and we try to figure that out, where if we were a little bit more prepared, there wouldn't be some of that back and forth, if that makes sense. Whereas if you are a little bit more prepared, you've got a history of your W-2s and some income statements. Sometimes you need tax returns, 30 days of pay stubs, which are usually really easy for people to get. So it shouldn't be a hassle, right? A lot of us can get, download them on our phones or have access online to get a lot of this stuff. So it's really minimum what we're collecting on a pre-approval, bank statements for 60 days, 2 years of W-2s, and 30 days of pay stubs are like the basics from an income and asset verification process. But so no, it's not a hassle. And depending on, where you're getting your loan at, like one of the things, Ryan, we talked about the move over here that I just recently made is one of the big reasons that our technology is a lot better. So the hassle is really taken out of that process by being able to upload documents from your phone. You see all the milestones. You can see so much just through a mobile app anymore, and being able to communicate through there that it shouldn't be a hassle. And I don't think it's a hassle to do all that. In the end, I don't think it's a hassle. I think some people might get frustrated. They're not quite prepared yet, but we can get them there. So
right. Right, and that's one of the things you're doing too up front is, hey, here's the things that I'm going to need from you, and here's why. Versus just saying, fill out my application, and then we'll get started. Because that, to me, that would be frustrating. But when you walk me through it, I'm going to need this, and this, and here's why. And I need you to be as kind of open and honest about all of this, and send me the things that I need. It's going to make your life 10 times easier. That's a lot less frustrating, right?
Absolutely. So a lot of times when we're getting these documents, it's not because like we just want them. We have to get certain things up front, and this would be a really good other myth of the home buying process is that all pre-approvals are equal, right? Because I think
that's one that's on the list.
Is it on there? You got it on there? Add it. All right. Yeah, we can add it on there.
Let's talk about that. They're all equal, right? All pre-approvals, aren't they?
Well, you would think so, right? That is a huge myth. So first of all, we got to break down the difference between a pre-qualification and a pre-approval. 2 completely different terms, right? 2 completely different terms. So if you're looking to buy a house, let's say, and you start the process of, what can I afford? What's my payment going to look like? You're going to talk to a lender, okay, someone like me, and you're going to do an application. a pre-qualification is pre-document verification is the easiest way to remember that, I think. So pre-qualification means we've got some information, we have an idea where your credit score is, you've told us that you're going to put X amount of money down, and you said you make about this per year. And we, as a lender, go, okay, and then we can run a few, maybe estimates for you and say, okay, here's roughly what your payment's going to be. You're pre-qualified, right? You should be able to buy a house. And then we get to the pre-approval stage, which is much stronger in terms of writing an offer and getting that accepted. And I think you could probably talk more on that from the real estate agent perspective. But getting an offer accepted, so being a very strong offer with the seller, right? It's also a lot more, whether you think the qualifications that you have are, of course, all the qualifications we need to get, the final approval. It's still important that we have checked off on the list of things that we need to verify as a lender to ensure that you, as the buyer, when we give you the pre-approval, that you're solid. So it's a lot stronger, and it's actually been reviewed with underwriting findings. Okay, and we've reviewed documents. So we've now saying, hey, you're good to go. You're good to buy this house. Like, you're pre-approved. You're still not fully approved yet. You're pre-approved. Okay, it's stronger than the pre-qual. So that then in turn will then help if you're writing an offer to get that accepted. It's a little bit stronger verbiage, and it doesn't put the seller at risk for a deal falling through, because it's never something you want during the home buying process. You get 3 weeks in and we can't move forward. So, but anyways, pre-qualification, pre-approval, you will see a lot of, I think, people in this industry, and I think you're going to see this more now, being more competitive, because it has slowed down a little bit, but I think you will see lenders get a little bit sloppier on verifying just to get that pre-approval out the door. I think it's very important that not happen in this industry. Very important. I think it's really important that we do get those pre-approvals, that we have verified it, and that even though somebody says, hey, I've got $60,000 in my bank account right now, seasoned, it's legal money, we have that in the bank account, even though I believe them, I think it's very important that we do look at it before handing out that pre-approval to protect all parties in the home buying process. So,
for sure. And
I don't remember what the myth was.
The myth was all pre-approval, which I think a lot of people equate pre-approval and pre-qualification as the same thing. From my perspective, I will tell you, and I just did this morning on a listing of ours. Called the lender. And said, hey, tell me about this borrower. You can do that as a listing agent, and it's our duty to do that for our clients that are selling their homes. Because I can tell you, as a brand new agent, before Blake and I were working together, I worked with a lender or two where they had a pre-qualification. I was like, let's go find the house. We found the house. Guess what? They couldn't buy it. They couldn't buy a house at all. So it's important. It's very important to have that pre-approval. And of course, working with somebody like Blake, all of the lenders that we partner with, that we work with, whether we work with them once or 100 times, we're having them call on behalf of our client. Save that step for the other agent. So when I write an offer for a client that Blake and I are working with, he's going to call or text that agent and say, hey, these are well-qualified buyers. We've run them through the basic pre-approval and gotten all that information, which I think is so important. Especially since the pandemic, but even before that, and now as we get, we're still, that's something that we'll never really be out of, as far as COVID-related issues, right? So regardless of what happens in the world, the market slows down. It's still important, even if it's only one offer, to call that lender, have that lender reach out on your client's behalf, because that's going to make your offer stronger. And that's one way to make the pre-approval stronger too. So they aren't all made the same, because there's lenders that I can call and I'm like, I have to jump through hoops to get a hold of them. Well, I don't really want my clients to accept that lender's, I'm going to tell them that I don't get to make that decision. It's my client's decision ultimately. And even I'll tell you, even if I have a client that, if I have a listing and Blake's working with another agent, and they write an offer on that property, I'm still going to call Blake, even though I know, hey, Blake's a good guy. This is in good shape. I'm going to give you a call and say, hey, Blake, tell me about Susie Smith that's writing an offer on this house. Just to verify that everything's good, and it's going to help. It's going to help everybody's process go more smooth, right?
Yeah, and I think, for the sake of, I think the audience that this will reach, that doesn't really understand like the backside of what, goes on when you write an offer and what led up to that as far as getting the pre-approval, because everybody goes into the home buying process at different stages of their life, right? And so with that being said, when it comes to, working with someone local, like you said, if we're in a market like we've seen recently that's super competitive for buyers, I think a lot of local realtors in whatever market you're in will agree to this, that if they are looking at multiple offers and they get a strong offer, competing offer with a local lender pre-approval that knows that market, I think that, and I don't want to speak on behalf of realtors, but I think that carries some weight in terms of presenting a pre-qualification letter from an online lender that didn't verify any documentation. I think that the local established lender that knows the market is going to be stronger. And then also to back up, when we are, we're supposed to, and this is how I do it, of course, if in case somebody was listening earlier and caught, you had asked that we as the lender sometimes will reach out to the listing side and we'll say, hey, this is a good solid offer. During that, nothing's ever disclosed in terms of your information. I think that's really important to know.
Right,
I think it's a lender's, well, here's what it is. It's the lender saying, I've looked at everything I needed to look at to pre-approve this person. I don't think that there will be any issues. It's a solid offer. And I hope you take it into consideration, really. So,
right.
I think it just goes an extra step, and it's important. So.
Awesome. Well, I'm going to couple these next two together. And that is, what would this isn't really a myth. So we've kind of got through all of the myths that we wanted to bust, and I think we busted them all. What would your tips be, Blake, to those who are planning to apply for a mortgage, and specifically those that are self-employed, that maybe think they're not able to get a pre-approval loan, or it's harder to get a pre-approval loan?
Yeah. Okay. So I'll start with kind of the first one, some tips on if you're looking to buy a home. And these tips, I think, will be beneficial for you whether you've bought one or you're getting ready to sell and buy another one. Regardless, I think what's important, and there's no right or wrong answer on who you call first. You'll hear people say, you need to call a lender first, or you need to call a realtor first. And I don't think there's a right or wrong answer to that. It's whatever you're comfortable with to get to the point where when you are talking about financing, I think it's most important that you're talking about that financing really before you're stepping foot in the house, regardless, to any house, whether it's your first, second, or third. If you are getting a loan, even if you're putting down a huge chunk of money, I think it's important that you figure the financing piece out. And a real quick example why I think that's important, because, for example, I had someone recently that they were putting a very large chunk of money down, like 40-50% on this property. And when doing that, they were putting down it was a large property. I think it was like 650 or something, and which is big for this area, and they were putting down like $300,000-$400,000. Well, one thing they didn't take into consideration was the taxes on that property. So even though they were putting down 40 or 50%, the taxes on this property were, more, I want to say, than what their previous whole mortgage payment was per month, right? So what I mean by that, and I think when it all came down to it, long story short, they pumped the brakes for a little bit after finding that out. But this is where it goes down to being prepared, because in this case, they went and looked at the house. Like, they thought that, they just didn't want that monthly payment. Like, they had a lot of money to put down. They just didn't want that monthly payment because of the taxes. So being prepared is just the best tip that I can give you. And if you don't know what being prepared is, a good lender will help you do that. Just be patient along the way and take that guidance as we work through getting those income and asset documents, because sometimes if you're not prepared, you don't know where to go get that stuff, and that's totally okay. For example, hey, I need a 2021 W-2 and I get 2021 entire tax return. So that's not typical verbiage that a lot of consumers are using on a daily basis. So just getting in touch with that lender early to get the financing really organized, then go look at houses and then make an offer.
Awesome. Well, Blake, it's so great to have you with us. We're running out of time here, but I wanted to talk about just your experience in one of the things we like to do in this podcast, talk about your experience specifically with the dsmSOLD team. And the work that we've done together. So how would you describe your experience working with us?
It's been great. I'll tell you, one of the things that I notice about working with the dsmSOLD team, so your team, Ryan, is that the systems that you have in terms of getting someone from start to finish, between communication and really taking care of the client and their needs, I can tell as a lender when, and I mean this truly, I can tell on my end when that's taking place. And I can tell on every transaction that you're very organized in the process and the communication, because things do in real estate sometimes go like this in order, and then sometimes they go all over the place, right?
Right.
You just don't know, and sometimes it just happens and you didn't even expect it, right? And so now I'm not saying that I'm recalling in a specific example something like that, but you have always taken care of that person from start to finish, for sure, and the admin team that you have is great too.
Awesome. Well, thank you for that. We really appreciate those kind words. What is one thing, and this will have to be a quick answer because we're just about out of time, but what is one thing that you think we could do differently to better support you or better support our client?
One thing that you could do better. I would say when you have someone that is interested in talking to a lender, that when you introduce them that you don't use email with me, because I am not very good with email, and that's the only thing. So, but you do a really good job at making those introductions. And so everybody that's listening, Ryan will introduce me through an email. I try to, which I love, like they're really great intros, and I've met some really cool people through these. But I am, anybody listening and you work with me, like I'm not the quickest when it comes to email because I get a ton of them. And so I try to do those like morning and night, right? And then sometimes get the middle in. So just have them call me.
Perfect. Well, that is super helpful. And of course,
we can help more people then. So
right. We want to support your business just like you support ours. So we will make sure that we're getting them connected with you over the phone. Because you are great. And one of the great things about working with the right lender is they're available when you need them to be available. So I can text Blake and say, hey, how are things going with this? Do you need anything from me? And he's going to get back to me versus somebody that maybe works for a bigger bank or an online only place. They may have business hours, right? But Blake, it was such a pleasure to have you with us today.
Thanks for having me.
And I really appreciate you sharing your experiences with us. Blake is at VIP Mortgage here in Des Moines and West Des Moines. And we will go ahead and share out his information in the show notes. That's all for today's episode of the dsmSOLD Team Podcast, Your Real Estate Experience Matters. So thank you so much for listening. And thank you, Blake, again for joining us and sharing your tips on myth busting in the mortgage process. Join us again for our next episode of the DSM Sold Team podcast. Your real estate experience matters. And of course, don't forget to follow us on our social media accounts and YouTube, wherever you're watching this episode. Thanks, everyone. Thanks, Blake. Bye.